When you start looking into gold investing and trading, there are two types of gold that seem to have withstood the test of time. But why? And are they still worth it today? Let's take a look. It's a new age debate. Do I buy stocks that represent an asset, or do I buy the asset itself? Well, seeing as physical gold sales continue to flourish, argument would say that buying physical gold is not only a viable option, but actually a really smart choice. If you're buying physical gold, your options will be gold bullion or gold coins. So what are they, and what is the difference? Well, the first difference should be quite obvious. Bullion is a bar of gold, whereas coins are, well, coins. But let's break it down further, shall we? Gold bullion is, simply put, 24-karat gold that has been formed into a bar of a specific weight. It is then stamped with the gold purity, the weight, and a serial number. Bullion itself refers to a bulk of precious metal intended for trade. Gold bullion comes in many weights, from a single gram all the way up to the largest standard bar, which is 12.5 kilos. There are weights of bullion all the way between these two figures, which means that you can really fine-tune how much gold you want and how much money you're willing to spend. The larger bars are obviously not so hard to keep track of, but the smaller ones will often come in little blister-style packaging for safekeeping. It is recommended that you don't take them out of this packaging, as it will void the certification. But what are the pros and cons of bullion? Well, I think the pros have already been sort of explained quite well. It's flexible, it is pure gold, and it is perhaps the simplest way of obtaining such an asset that will appreciate in value over time. However, bullion can be very expensive to insure, the larger bars can be more difficult to resell, and in the UK, profits from selling gold can be subject to capital gains tax. If you sell gold and make a profit over £3,000, that will put you over the threshold and you will have to file and pay tax on those profits. So what other option is there? Well, allow me to introduce you to gold sovereigns and gold Britannias. Gold sovereigns are a historical type of precious metal coin, first introduced in the 1400s. They are no longer used as a typical currency, but they are very popular when it comes to collecting and investing. Gold Britannias are newer, first introduced in the 1980s, and they are a very popular investment option. Sovereigns are typically 22 carats, while Britannias are 24. And there are options to buy half or quarter-size coins in order to diversify their price point. Gold coins are interesting, as with sovereigns in particular, you can sometimes make a greater profit from your investment, not due to the gold value, but due to the collectability of the coin itself. Gold coins are also easier to keep safe, as they are typically smaller than your standard bullion. However, they tend to be a little less flexible with their price points, as you are kind of stuck with a full, half or quarter size coin, as opposed to sort of any amount of gold bullion that you wish to purchase. On the plus side, these coins, being that they are technically legally currency, are not subject to capital gains tax on any profits, which is a great thing if you don't want to deal with that side of things. So then the question is, what should you go for? Well, that isn't really a question that we can answer for you. Though if I was to give my opinion, I would say it's probably best to go for a bit of both. That way you can play both markets and make it work for you. Hopefully, you now know a little bit more about gold than you did before. And if you did learn anything from this video, we'd love to know what it was. Thank you for tuning in to the Gold Traders channel. We hope to see you in the next one.